Hello everyone. In this video, we will be seeing about Sec B costing chapter 4 specialist cost management techniques. We will be seeing the concepts which we require for solving these questions and also the questions we are going to solve in this video. All the practical questions of this chapter will be covered in this video. So stick till the end of this video to know completely about this chapter's practical questions. Also, subscribe to the channel if you have not yet, so it will be helpful for me to make more videos and it will give me the motivation to make them. So first, we are going to see what are the relevant concepts. First thing we have to see the target costing concept and then throughput accounting concept. Then another two concepts about life cycle costing and experience curve. Come, let's get into the topic. First, we can see about the target costing concept. Target costing is the method in which you have to bring down the cost from current level to the target cost level. Currently, some cost you will be incurring. From that, you have to bring the cost down to the target cost. You will fix a target based on your assumptions and budgets and all, and then to that target you have to bring that cost down. You have to reduce the cost. In this method, what will be there is target selling price will be fixed as per the market forces. They will fix the target selling price without respect to the cost, and then profit also will be fixed. After reducing the profit from the selling price, you will get the cost price. This is the target cost which you have to achieve. Currently, you will have some cost, you have to reduce it and bring it to the target cost price. Now, this is the concept of target costing. Now we are going to see the topic of throughput accounting. In that, first we have to see two things, theory of constraints and then the throughput accounting formula. First, we are going to see what is theory of constraints. According to the theory of constraints, there are two types of resources in a company. First one is bottleneck resource. Second one is a non-bottleneck resource. Both of them are used in manufacturing of products. What is a bottleneck resource? Bottleneck resource is a resource which is limited. Only a certain amount of resource only you have. For example, machine hours. For example, material. That and all. If you have only a certain amount, if you have only 300 hours of machinery hours, that is a limiting factor. That is a bottleneck resource. If you have only 200 kilograms of material, that is also a limiting factor. It will be a bottleneck resource. It cannot be increased beyond that level. You cannot get more machine hours or more material. That is the meaning of bottleneck resource. In the case of non-bottleneck resource, there is no limitation in the availability. How much you want, that much you can increase it. That is the meaning of non-bottleneck resource. In this, we are going to see an example. For example, in a production process, we have two machines, machine A and machine B. The raw material will go through machine A, and then the output of machine A will be the input of machine B. The product which comes out of machine A, it will be given into machine B, and then we will get the final finished goods output. This is the process. Now, machine A has the capacity to process 1000 units. 1000 units of raw material it can process and convert it into WIP. But machine B can process only 700 units. 1000 units will be produced by machine A. Out of that, 700 only machine B can process in one batch. After completing the 700 units only, you have to put another 300 and process them. That is the problem here. Here, the 700 units capacity is the limiting factor. So, it is a bottleneck resource. That is what you have to identify here. The machine which has a limited number of units is a bottleneck resource. Now, we can see the next example. For example, if you put 1000 unit raw material, machine A will process entire 1000 because the capacity is 1000. But machine B will be able to process only 700. So, remaining 300, what you will do? You cannot put it into machine B. So, you will keep it in the inventory. For this keeping in inventory, you will incur the inventory holding cost. That is one more point which you have to note here. The maintenance, rent, electricity, security charges which you have to incur for maintaining inventory. That you have to incur. Now, in the second example, if you input 700 units of raw material, what will happen? Machine A will process it without any problem because the capacity is 1000. Now, this output from machine A, machine B also will process 700 units without any problem because it is maximum capacity 700 units. So, you will have 0 units held in inventory. Here, no inventory holding cost will be incurred. This is the point which you have to remember. Between these two examples, the limiting factor is used properly. Because of that, you are saving the inventory holding cost. Now what we can analyze is that the bottleneck resource, that is machine B, is used 100%. 700 units is fully used of machine B. But non-bottleneck resource, machine A, it is not utilized 100%. 1000 units is the capacity, but you are utilizing only 700. You are not utilizing fully. As a result, what you are getting? You are getting a reduction in the inventory holding cost because there is no inventory held. That is the result which you have to see here. If you use the bottleneck resource fully and then the non-bottleneck resource not utilizing 100% fully, you will get a reduction in the inventory holding cost. This is the concept of theory of constraints. Now we have to see the concept of throughput accounting. Throughput accounting is based on the logic of return per product per bottleneck hour. That is the logic behind this method. Assumptions. What are the assumptions we are going to do? In this, they are assuming that the labor and overhead expenses are fixed cost. In marginal costing, we will have studied that sales minus variable cost, you will get the contribution, and when you reduce the fixed cost, you will get the profit or loss. This is the marginal costing basic template. In this, fixed cost will be separate, variable cost will be separate. Variable cost will be calculated on a per unit basis. Fixed cost will be fixed irrespective of any change in volume of output. This is the basic logic. In this throughput accounting, what is a fixed cost? They are telling that fixed cost is the labor and overhead expenses. Why labor and overhead expenses are fixed cost? They are considering it as fixed and assuming it as factory cost. This is the assumption in this method. And then variable cost, they are considering only material cost is variable. Other costs are fixed. That is what they are making the assumption. Here, sales minus variable cost, you will get the throughput. That is the return. Here, why we are not calling it throughput, why we are not calling it contribution, but naming it as throughput? Because we are not considering all the variable cost. We are assuming labor and overhead to be fixed. So we cannot call it as contribution. So we are giving a new name called throughput. Here we have to find out the throughput accounting ratio, which is the main answer for the throughput accounting sums. Throughput accounting ratio is the division of throughput per bottleneck minute divided by factory cost per bottleneck minute. What is a bottleneck minute? As we saw in the examples, in our machines, we had bottleneck units. Only 700 units can be processed. Like that, there will be bottleneck minutes in the question. The machine can operate only for 20,000 minutes. This is the bottleneck here. The timing of the operating of machinery, it will be the bottleneck resource. That is the bottleneck minute. In question, it will be given how much bottleneck minute is there. And then factory cost and throughput. Throughput, you can find it out easily by reducing the variable cost from the sales, you will get the throughput. Factory cost, it will also be given directly in the question. Factory cost is equal to 10 lakh. Like that, there will be given some value in the question. Now, there will be given bottleneck minutes. You have to find out the throughput, divided by bottleneck minute, you will get the numerator. You have to find out the factory cost, divided by the bottleneck minute, you will get the denominator. Now, dividing these two, you will get the throughput accounting ratio. Now, based on the result of this ratio, we can come to some conclusion. If the accounting ratio is more than 1, you can think that the firm is profitable. There will be profit resulting in the firm's results. If it is equal to 1, you can consider that it as break-even. Since here, why we are taking this is that this throughput in the numerator, it is the similar to contribution. And then in the denominator, we are taking factory cost, it is similar to fixed cost. When these two are equal, you will get the result of 1 by 1 equal to 1 will be your answer. If contribution is equal to fixed cost, there will be no profit, no loss, break-even situation. If the profit is more, that is contribution is more and fixed cost are less, you will get a positive profit. For example, if contribution is 10 lakh and then the fixed cost is 5 lakh, here you will get a result of 2. This will be more than 1 and then you will have profit because of contribution is more than fixed cost. That is what they are saying here. More than 1 profitable, equal to 1 break even. I have given an illustration also for this. You can refer it afterwards. Now, this is the concept of throughput accounting. We are going to apply it in a sum, so you need not make more concentration on this example. This is just an illustration. We are going to see the practical sum in the questions itself. Now we are going to see the concept of experience curve. This is based on the logic of practice makes a man perfect. As you gain experience, you will be able to do the work more efficiently and more effectively. Quickly you will be able to complete. That is the basic logic of this concept. Gaining more experience helps you to do something more efficiently. Here we have an example for that. For example, you are producing a product. You are producing different batches of it continuously. As you move towards more batches, you will gain more experience. If you gain more experience, you will be able to manufacture the products within a shorter period of time. For example, when you produce 100 units, the total time taken is 100 hours. The average time is 1 hour per unit. But when you do 200 units, the total time taken will be reduced to 160. The average time taken will be reduced to 0.8. This is the logic here. How it reduced? Because you gained experience and you came to know the intricacies of the work. You are able to do the work more efficiently and properly. This is the effect of experience curve. Now, when you are doubling the units, the average time taken per unit is reduced by 20%. Earlier we had 1 hour. Now we are getting only 0.8 hour. 20% of the time is reducing when you double the units. This is the basic calculation which you have to do to find out the experience curve. Here, we have to find out the learning rate. The learning rate is the factor between the time taken for each unit in different batches. Here, first you took 1 hour, next you are taking 0.8 hour. So you are taking 80% of the earlier time. First you had 1 hour. After that, you are taking 80%. 0.8 hour. After that, you are taking 80% of the 0.8 hour. You are taking 0.64 hours. Then again 80% of it, you are taking 0.512 hours to make the unit. So, the learning rate is 80%. The factor between the time taken, which is 80%. Now, you have to find out the learning index. For learning index calculation, we have a formula. Log of learning rate divided by log of 2. Learning rate is 80%, that is 0.8, which we saw earlier. We have to find log of 0.8 and then divide it by log of 2. This will be the answer. This will be generally given in the question. You need not remember this formula and all. They will directly give the learning index. B is equal to this much. They will give the value. You need not remember this formula. I am just telling that how they are getting that number. This will be given in the question. Okay. Now next what we have to do? We have to find out the answer to a formula. The formula is y equal to x power b. This formula you have to remember. This is very important. There are many questions regarding this formula and this type of questions. In this, what are the different terms? What is the meaning of x? X is the number of units. How many units you want to produce? That is what X. Then B is the learning index, already given in the question. This number it will be given in the question. Now, what is A? A is the time taken to produce the first unit. Here, we got the time taken to produce the first unit is 1 hour. First batch 100 units, in that the first unit we are making for 1 hour. The same thing is in the formula, that is called as A, time taken to produce the first unit. Now, when you perform this calculation, by multiplying and doing this calculation, what you will get? You will get the term Y. What is Y? Average time taken per unit for X units. For example, if you are putting 250 units, you will get in this Y answer, you will get the average time taken to make per unit. Average time taken per unit. For example, 2 hours is taken per unit. This will be the answer. This will be the answer of Y. Now, by using this, what you can find out? Total time taken to produce 250 units. For 1 unit, you are taking 2 hours. But for total 250 units, how much hours you will take? You will take 500 hours. This is the calculation which we can make from the result of this formula. Now, for recapping what we have identified that gaining experience will help you work more efficiently. When you double the units, the time taken will be multiplied by the factor. That factor is called the learning rate. From this learning rate, you can find out the learning index. This will be always given in the question. Now, after finding this learning index, you have to find out the answer for the term Y. For that, you have to perform the following calculation. A into X power B. X is the number of units, B is the learning index, A is the time taken to produce the first unit, Y is the result which you are getting. It is the average time taken per unit for X units. For 1 unit manufacturing, how much time you are taking for this much number of units. That is the answer which you are going to get. This is the entire concept of experience curve. Now we are going to see the concept of life cycle costing. In this, you need to understand just a basic thing to solve the problems. You have to understand that there are 4 stages: introduction, growth, maturity, and then the decline stage. In the growth stage, there will be increasing sales. In the maturity stage, there will be increasing sales up to maximum. After that, the sales will decline. In the introduction stage, as we already know, now we are newly introducing a product, so there will be low sales only. This is the sales proportion. For example, in a project, you can sell entirely 1 lakh units, means the 1 lakh units that will be sold in a low percentage. For example, only 10% will be sold in the introduction stage. In the growth stage, you will sell about 25%. In the maturity stage, you will sell about 50%. In the declining stage, you will sell only less percentage. The remaining percentage only you will be able to sell in the decline. Majority portion of the sales will be covered in the growth stage and the maturity stage. In the maturity stage only, you will attain the maximum level of sales. This is the conclusion which you have to arrive and remember to solve the sums. Now we are going to see illustration number 1. The company expects to successfully launch Toy H based on a Disney character. The company must pay 15% royalty on selling price to Disneyland. A company is preparing a toy based on a Disneyland character. They have to pay 15% royalty for using that character to the Disneyland. This is the information. The selling price per toy is 100 rupees. The profit is 25% on selling price. This is the cost data. Now, in addition to the above, each toy requires 0.6 kg of raw material, which are supplied at a cost of 16 per kg at a normal 4% substandard quality, which is not usable in the manufacture. Now, what is the requirement? We have to find out the target cost. What should be the extent of cost reduction? In target costing, we will calculate the current cost, and we will also calculate the target cost. The difference between the current cost and target cost is the amount of cost which you have to reduce. That is what they are asking in the question. Here, this is an important point of the question. Here they are saying that there is a 4% substandard quality. What is the meaning of substandard quality? If you purchase 100 kg of raw material, only 96 kg will be of good quality. 4% will be of bad quality. This 4%, this 4 kilograms, you cannot use in the production. They have not given any scrap value for the bad material which you cannot use in the manufacturing. Now, we can see the solution for this question. Before seeing the solution, we have to see one thing. What is the motive here? We have to reduce the cost from current level to target cost level. In that, we cannot reduce the uncontrollable cost. What is an uncontrollable cost? For example, in that question, we had a royalty. That royalty is compulsorily we have to pay to the Disneyland. It is about 15%. You cannot control that cost or reduce that cost. That is an uncontrollable cost. That also you should reduce from the target selling price. Normally in target costing, what we will do? Target selling price less target profit, you will get the target cost. Among these, you have to also reduce the uncontrollable cost also. This also you cannot reduce, so that is also should not form a part of target cost. After reducing that, you will arrive at the target cost. So in the solution, accordingly, we have to write the target selling price and then reduce the royalty and profit. You will get the target cost. Now we have to find out the current cost. The current cost is, they have given the cost details in the question. This is the cost data. This we are going to use it as it is in the answer. This is in the format of rupees per toy. For one toy, what is the cost? That is given here. We have brought all the data here itself, and then we have to find out the cost of other material. That is the point which we discussed earlier, that 4% substandard quality. Here, what we are doing is, we have a 4% substandard quality. 1 kg, the price is 16 rupees. For 100 kg, the price is 1600 rupees. Now, This 100 kg we took is an assumption, just a notional amount to understand the concept. Now we have to calculate the cost of good units. Good units 96 kilograms multiplied by 60 rupees per kilogram, this is the cost. For the bad units 4 kilograms, this is the cost. Now what will happen in case of bad units? The cost of bad units will be absorbed by the good units. How it will be absorbed? Now total cost, we have two methods for this. Either we can distribute the total cost over good units alone, so that the total good cost will be going to good units. The total bad units cost will also be absorbed by the good units. Or else we can find out the cost per bad unit which will be distributed to good unit. That also we can do. In the first method, the total cost, good units, bad units, total, this 1600 cost total, it will be distributed only over the good units 96 kilogram. Here we will get the price of 16.67 rupees per kilogram. In the second method, we already have the cost per good unit 60 rupees. Now the cost per bad unit, the total cost of bad units, how much we have? 64 rupees we have total cost of bad units. This also we will distribute among the good units. 64 divided by 96. This you will get 0.67. Good unit we already have. Cost of bad units, which will be absorbed by good units, we found out. Now we have to add these two. Now we will get 16.67. In both these methods, you will get the same answer. You are just finding it in a different method. So now the cost per kilogram is 16.67 we found out. For 1 unit of toy, for one toy, how much material they are using? 0. They are using 0.6 kilogram for one toy. For 1 kilogram, the price was this much. So this is the price for one toy. Accordingly, I have included the 10 rupees in the cost. This is the current cost level. This is the target cost level we already found out earlier. Now, how much cost we have to reduce? 3 rupees we have to reduce. This is the answer they are asking. That's all about this question. Now we are going to see the second illustration. This is based on the concept of experience curve. Now, the company manufactures consumer durable products in a very highly competitive market. The company is considering launching a new product into the market and gather the following data. We have given the data relating to a new product. Expected market price, direct material cost, direct labor cost, variable overheads cost, packing machine cost. Especially we have to purchase the machine for this product. The machine cost is 5 lakh rupees. These and all data given for per unit basis. Now, the company expects the selling price for the new product to continue throughout the product's life, and a total of 1000 units can be sold over the entire lifetime of the product. In life cycle costing, we will see that every product has a life cycle: introduction stage, growth stage, maturity, and decline stage. In the total life cycle, we are going to sell 1000 units of this product, and then the selling price will be 5000 over all the stages of the product's life cycle. We have to see that the selling price is constant. The direct labor costs are expected to reduce as the volume of output increases due to the effect of the 80% learning curve index they have given. This is the value of B in the formula. The expected time to be taken for the first unit is 30 hours, and the learning curve effect is expected to end after 250 units have been produced. Units produced after first 250 units will take the same time as the 250th unit. Now, the first unit, for producing first unit, they will take 30 hours time. After that, they will have a 80% learning curve for every unit they are producing. This learning curve effect, it will work till 250th unit. After that, there will be no learning curve effect. So, what will happen is that for 250 first unit, 250 second unit, what will be the time is that it will be same as the 250th unit time. For first unit, 30 hours. It will reduce gradually and it will come to some hours, some number of hours at 250th unit. This time which is taken in the 250th unit production, that will be continued for the remaining 750 units. Total we are producing 1000 units. Learning curve effect will come till 250 units. Remaining 750 units which will be produced at the time which is taken for producing the 250th unit. Now we can see the solution. Here, what is the requirement? We have to calculate the expected total labor hours and calculate the profitability that the company will earn over the lifetime of the product. We also have another two requirements in the question. First, we can complete these two things. Now this is the solution. As we saw already, we have to calculate the time taken for 250th unit. This is our first objective. Now for that, what is the formula? The total time taken for 250 units minus total time taken for 249 units. For total 249 units, sometime it has taken. 250 units, sometime it has taken. Now difference between these two, we can take it as the time taken to produce the 250th unit. Now, this is the formula I have written here. Total labor hours for 250 units minus total labor hours for 249 units. This will give the time taken for 250th unit. Now, what is the total time taken for 250 units? For that, we are calculating using a formula: time taken per unit into number of units. If you want to calculate the total time taken for 250 units, we are going to calculate the time taken per unit into 250 units. That is the thing we are using here. For that, we have to calculate the time taken per unit. That is the thing we are calculating here. This is the formula as we saw earlier. Y is the average time taken per unit. So for 250 units, why 250? 30 is the time taken for first unit, A. And then X is the number of units, 250. And then B is the index that they gave. Up to 250 units, this is the time taken per unit, average time taken per unit. So if we multiply it by 250, you will get the total time taken for 250 units. Now, for Y 249, same 30 is the time taken to produce first unit, 249 is the number of units, B is the index. We will get the average time taken per unit up to 249 units. Total time taken for 249 units, multiply it by 249. You will get this answer. Now we have to subtract these two. Total time taken for 250 units reduced by total time taken for 249 units. You will get the time taken for 250th unit. This is the answer, 3.58 hours, time taken for 250th unit. Now, what is the time taken for total 1000 units? For 250 units, this will be the average time taken as we saw earlier. For 250 units, this is the average time taken. You multiply by it, you will get the total time taken for 250 units. This will come directly here. And then for the remaining 750 units, what will be the time taken per unit? 3.58 hours, because it is the time taken for 250th unit. This is the total time taken for 1000 units, which is the answer for the first part of the question. Now, they have asked the profitability of the product. We already saw the data given in the question. 5000 is the constant selling price for total 1000 units, 50 lakh. Direct material, 1000 units into they have given the cost in the question. Direct labor, this much is the total direct labor hours, and for 1 hour, 80 rupees we are paying for the labor. Variable overheads, for 1 unit you are paying 1000 rupees. After reducing all these costs, you are getting the contribution. Since these are variable costs, you are first reducing it, and then you are finding the contribution. After that, you are reducing the packing machine cost, which is the fixed cost, which you have to specially purchase for this product. Now, this is the net profit which you are getting by selling this product. The total profit is 13,33,740. Now, we can see the next two parts of the question. This is the third part of the question. Calculate the average target labor cost per unit. Here they are asking the target cost. Target cost of labor. Specifically, they are asking for labor cost. Over the lifetime of the product, if the company requires an average profit of 800 rupees per unit to achieve its long-term objective, what you will do? You will reduce the target. You will take the target selling price minus you will reduce the target profit, and then the which costs are irrelevant that you will reduce from the this thing. Irrelevant cost you will reduce. What is the irrelevant cost here? We are focusing only on target labor cost. So all the other costs are irrelevant cost that you have to reduce. Now we can see the solution. Here, this is the sales based on 5000 rupees constant selling price. We are reducing the profit and then the direct material and then variable overhead packing machine cost. Total, we have these and all, we have the cost. Out of that, direct labor alone, we are taking it as target labor cost. We are calculating the target labor cost. So you have to reduce all other costs, material, variable, packing machine. That all you have to reduce from the target selling price. Material, variable, packing machine. Additionally, you are reducing the profit to get the target labor cost. This is the total target labor cost which you are getting. Divided by 1000 units, the target labor cost per unit is 850 rupees. Now the current labor cost is 80 rupees, which is for 1 hour, and for 1 unit, how much it is taking? The target labor cost is 850 rupees. This is the answer for this question. That's all about this question. We can move to the next question. Now we can see illustration number 3. In this, the company is preparing a equipment. The equipment is about to be replaced by the CF system or by an OF system. The finance cost is 12% per year. This we can take it as the discount rate. And other estimated costs are as follows. Initial cost and an annual operating cost. They are going to purchase an equipment. They have two options. Either they can buy a CF equipment or a OF equipment. For CF equipment, the total cost we have to calculate. And OF equipment also, we have to calculate the total cost. In this, what is the requirement is that, which is the option which the company has to choose, which is cheaper. That is what they are asking. The initial cost and the annual operating cost are given here. For replacement decision or buying decision, in CA Inter Financial Management or CA Final Advanced Financial Management, we might have studied the concept of present value. We have to take all the present value of cost and then we have to choose the machine which has the lower present value of cost. That is what we are going to do here. The initial cost is already at the present value. This annual operating cost is given at a per annum basis. So we have to calculate the present value of these costs at 12% discount rate. The time period for which the machine will be operated is 12 years. For 12 years, every year you will incur 24,000. That every year you will incur 24,000. You have to bring all the 24,000 to the present value. We can see the solution. Now this is the solution. The initial cost we have taken as it is, and then the operating cost 24,000 we have taken at a present value. This is the present value factor of that at 12% discount rate for 12 years. This is the present value factor. When you multiply the annual cost by the present value factor, you are going to get the present value of operating cost. This is the total cost which you are getting. Now you have to choose the machine with the lowest present value. Since this is the cost, the lower the cost it is good for us. The cheaper machine we have to choose. This is the cheaper machine OF system. We have to choose this. That is the answer for this question. Now we can read the next question, illustration number 4. This is a theory question. You can read this on your own. Since we are covering only practical part in this video, I am ignoring this question. Now we can move to the illustration number 5. Now we are going to see illustration number 5. The company manufactures 3 products. The material cost, selling price and bottleneck resource details per unit are given as follows. Selling price they have given for 3 products. Material cost also for 3 products. Bottleneck resource also for 3 products. The factory cost total is 221,600 rupees. The bottleneck resources time is 75,120 minutes. This is based on the concept of throughput accounting and theory of constraints. We have already saw the concept of throughput accounting. Now we can see the solution directly. Now we can see the solution. In this type of question, what we have to do is that we have to find out the throughput accounting ratio. Throughput accounting ratio, we already saw the formula. We have to first calculate the bottleneck minutes, and then after that we have to calculate the throughput per bottleneck minute, and then we have to calculate the factory cost per bottleneck minute. We have to first calculate the throughput per bottleneck minute and then the factory cost per bottleneck minute. By dividing these two, you will get the throughput accounting ratio. First, we are going to calculate the factory cost per bottleneck minute. Total factory cost 221,600 divided by the total factory cost that you got 75,120. You will get the factory cost per bottleneck minute. Now, for getting the throughput per bottleneck minute, we have to calculate the contribution, which is somewhat similar like contribution as we saw in the concept. Selling price less material cost and other variable cost. You will get the throughput. Factory cost is in the nature of fixed cost, so we should not reduce it. So this is the throughput per unit for each of the product X, Y, and Z. For one unit of X, how much bottleneck resource it is taking to produce is that 15 minutes. 15 minutes and then 20 minutes is taking for producing 1 unit of Z. Now, this is the throughput per unit. This is the bottleneck resource per unit. If you divide these two, you will get the throughput per bottleneck minute. You are getting this for all the 3 products. Here, we are getting the throughput per bottleneck minute as we saw earlier. These 3 we are getting. Now we are getting the factory cost per bottleneck minute also 2.95. After that, you have to rank this. Based on this throughput accounting ratio rank only, you will be able to select the product. If it is a high rank, you will produce that product first. The next rank will be produced in the next order. The product with the last rank will be produced if you have bottleneck minute, or else it will not be produced because it is the product with the lowest throughput, lowest return it is giving. We have to produce the product with the highest return first. That's all the answer for this question. Now we are going to see illustration number 6. A chemical company produces 2 chemicals, SX and ZX. Environmental activities and cost associated with them are as follows. For one, there are 2 chemicals. The units produced of these chemicals are given. Packing material, how much you are spending. Energy usage, how much you are using. Toxin releases. By producing the chemical, you are polluting the environment. How much toxins you are releasing for the product. Pollution control machine hours. That is also they have given here. Now, cost of environmental activity. When you are producing a chemical, you have to do environmental activity also. That activity cost they have given here. The above thing which is given is that the cost driver units they have given. Kilogram, kilowatt hour, pounds into the air. Everything is the cost driver units. Here we are getting the actual cost in rupees. Packing material this much cost, energy this much cost, fines for toxin release this much cost, operating cost of the pollution control equipment. The company has a pollution control equipment. For that, how much hours they are operating. The pollution control equipment machinery we have for the chemical SX we are operating it for 32,000 hours. For the chemical ZX we are operating it for 8,000 hours. Total cost which we are spending for pollution control equipment operation is that 1,12,000. Now we have to find out the environmental cost per kilogram. We have to find out the environmental cost. These are the environmental cost. We have to calculate it per kilogram of the chemical produced. Now we can see the solution. For this question, we can see the solution in the IC study material itself. We have to allocate the cost. We have different environmental costs, packing material, energy. We have to allocate these two between these 2 chemical products. For that, we have the basis also. Packing material cost, we can allocate on the basis of packing materials usage. Energy cost, we can allocate on the basis of energy usage. Fines for toxin release. You are paying fine for releasing the pollution. That you can allocate based on the amount of pollution cost. The operating cost, you can allocate based on the pollution control machine hour. Now, that is what they have done here. The total cost is 3,60,000. That they are allocating in the basis of 80,000 kilogram, 40,000 kilogram. What is this? This is the packing material usage. Energy cost, they are allocating based on the energy usage. Toxin released fines, they are allocating based on the pounds released into the air. Operating cost, they are allocating based on the machine hours which you are using for the pollution control equipment. Now, they are calculating the total cost. For for the chemicals, they have allocated the each cost. Now, total cost allocated, they are calculating. Now, total units produced, they have already given in the question. You are calculating the total environmental cost allocated divided by the total units produced. Now, you will get total environmental cost per unit produced. This is the answer of this question. If you divide the total cost divided by the total units without allocating, you will get the overall environmental cost per kilogram. That's all for this question. Now we are going to see test your knowledge question number 1. This question is for target costing concept. Let's read the question. The company manufactures standard heavy-duty steel storage racks for industrial use. Each storage rack is sold for 750 rupees each. The selling price is 750. The company produces 10,000 racks per annum. The relevant cost is given here. Material, labor, machine setup, and mechanical assembly. The material and labor, you can note that budget and actual are differing. The units used, 5 lakh is used in direct material, but 5 lakh 20,000 is used in the actual. And direct labor, 90,000 hours used in budget, but 1 lakh hours used in actual. Now, the next thing is, actual and budgeted operating levels are the same. They are telling that budget and actual both have the same capacity. There is no change in the capacity. Actual and standard rates of material procurement and hourly labor rate are also the same. By this, what we can see is that the material price is same in budget and actual, and also the labor rate is also same in budget and actual. Any variance in cost, the difference in cost is solely due to difference in usage and hours required to complete the production. The only difference we are getting is that because of the difference in usage. Here we are using 20,000 square feet more material. Here we are using 10,000 hours more labor. This is the only reason for the cost difference between budget and actual. Now, a comparable rack is available in the market for 675 rupees each. Another rack, which is similar to our rack, it is available in the market. The selling price is 675, but our selling price is 750. Now, the marketing manager has determined that in order to maintain the company's existing market share of 10,000 rack, the company must reduce the price to 675. If we should maintain the same sales, we should reduce the price, or else the customers will go to the other company and buy their rack. They will not come to us. So we have to reduce the selling price. Now, what they are asking in the question is that we have to calculate the current cost and profit and identify the non-value added activities. First, we have to calculate the current cost. This is the cost, and then this is the units actually used. We have to calculate the current cost and profit per unit basis. So we can see the solution. Now in the solution, they have given the revenue, direct material, direct labor, machine setup. The revenue, current cost and current profit we are going to find out. So we have to take the current selling price only. We are selling 10,000 racks. The selling price is 750. Total sales. Now we are using this much direct material. This much is the total cost. This amount itself they have given in the question. We are dividing it and finding the actual cost per rack. And then here, for finding this 200 rupees, what we are doing is that we are dividing the total cost of 20 lakh rupees divided by 10,000 racks we are doing. So we have to find out the cost per rack. That is what we are doing here. So the total cost 10 lakh divided by 10,000, we get 100 rupees per rack for direct labor. For machine setup, total cost 1,50,000 divided by 10,000 rack, we get 15. For mechanical assembly, now for mechanical assembly, the total cost is 30 lakh rupees. We are dividing it by 10,000 racks. We are getting 300 rupees per rack. When we total this cost, the total cost it is coming 615 rupees per rack. And then we are reducing it from the revenue per unit. So we are getting 135 profit per rack. This is what they are asking. Current cost and then the profit per unit. Now, the next question is, what are the non-value added activities? Here they have given it. Machine setup is the time required to get the machines and the assembly line ready for production. It is not adding any value. It is not going to be seen by the customer in the final product. It is done in the manufacturing process, but the customer cannot see it visibly in the final product. So the machine setup and then the assembly line. These two are non-value added activities. Hence, it's a non-value added activities. What they are saying is that this 15,000 hours we are spending, right? That is a non-value added activity because the customer cannot see it in the final product. Now, we are going to see the next subdivision. The next subdivision, what they are asking is that they are asking to calculate a new target cost for a sales price of 675. The profit per unit is to be maintained. We need the current profit, but we are going to calculate the target cost when the selling price is reduced. Here, in the solution, the new selling price is 675. Now, the profit we have to maintain is that the current profit we have to maintain. Current profit is 135. New selling price 675 minus current profit 135, you will get 540 per unit. This is the target cost. That is what they have asked in the second subdivision. Now we can see the third question. In the third subdivision, they are asking what the company has to do to achieve the target cost. The target cost of 540, for achieving that, what the company should do. For that also they have given the answer. We can see it. In the third subdivision, the answer what they are giving is that in the question we are getting an inefficiency. The budgeted direct material is 5 lakh. We have to use only 5 lakh square feet of material, but we are using 20,000 extra. In direct labor, 90,000 hours is the budgeted, but we are using 1 lakh hours. That 20,000 square feet we are using extra, and that 10,000 hours also we are using additionally beyond the budget capacity. So we have to reduce that. That is the inefficiency. That is what they are telling here. For extra 20,000 square feet and extra 10,000 hours, we have to calculate the cost which is being incurred for that 20,000 and 10,000 extra. Material cost per square feet. The total cost we are incurring is 20 lakh for 5 lakh 20,000 square feet. Actual usage. We are getting the cost is 3.85 rupees per square feet. Now, for 20,000 extra, how much cost we incurred additionally? 20,000 square feet into 3.85 per square feet. Total will come to 77,000. This is the extra cost due to the unwanted extra usage of material. Now, 10,000 hours we used extra labor. Here, actual cost is 10 lakh, actual labor hours. This should be 1 lakh hours because the actual usage is 1 lakh hours. It is a printing mistake. 10 rupees per hour is the labor rate. Now, we are using 10,000 hours extra. Cost per hour is 10 rupees. So, 1 lakh rupee we are wasting because of extra labor hours usage. This is what they are telling. And then machine setup cost, as they already said, it is a non-value added cost. So the company should try to reduce the hours. And then assembly line cost also, the company should try to reduce. If they reduce all these inefficiency and cost, they can achieve the target cost of 540. That's all about this question. Now we are going to see the second question. This question is about life cycle costing. We are going to calculate the total cost and total profit over the lifetime of a product. Now, what they are saying is that the company makes digital watches. The company is preparing a product life cycle budget. They are preparing a budget. Development on the new watch is to start shortly. Estimates for the new watch. What is the estimated cost, profit and all they have given here. Total units to be manufactured and sold. Total we will be producing and selling to like 40,000 watches. Selling price per watch is 500. Life cycle cost. The R&D and design cost will be for 80 lakhs. Variable cost per watch per batch. They are calculating the variable cost in two ways. One is for per watch. The 240,000 watches multiplied by 120, this will be one variable cost. Another variable cost is per batch. For one batch, they will do 300 watches. Totally, they are doing 240,000 watches. 240,000 watches. And then they are making 300 watches per batch. Now, how many batches they are getting? They are getting 800 batches. For one batch, the total variable cost is 4,000 rupees. So, they are getting 32 lakh variable cost for per batch as a manufacturing cost. Same like this, we have variable cost per batch and per watch. In marketing also, distribution also, we have different. Per watch means you have to multiply with the number of watches. Per batch means you have to calculate the number of batches like this and then you have to multiply by the cost per batch. Now we can see the solution. Here, this is the solution. The revenue is at 500 selling price per watch, 240,000 watches. Total sales. R&D and design cost, 80 lakh. Manufacturing cost. Variable cost is that for one watch, 120. 240,000 watches, this much. Now for per batch, 240,000 divided by, this should be 300. It is a printing mistake. Now if you calculate this, you will get 32 lakh. As we calculated already. And then fixed cost is they have given already 1 crore 12 lakh. Now, marketing cost also. They have given the cost per batch 24 rupees. The number of watches per batch is 96. We have to divide it in the same manner and you can calculate the 60,000. Fixed they have already given the amount itself. Distribution also per watch you can calculate the amount by multiplying. Fixed they have given. Customer service cost. Variable cost they have given it is per watch. Now, this is the total cost. If you total all these costs, you will get 11 crore 65 lakh rupees 60,000. Now, operating income. When you reduce the total cost from total sales, you will get 34 lakh 40,000. This will be the total operating income over the lifetime of the product. Now, what they are asking in the second subdivision, wait, we can see the question. Second subdivision, what they are asking is that the percentage of total cost incurred till the R&D and design stage. Now we can see the solution. What they are asking is that the development process will go stage by stage. First, they will create the idea, and then they will make the estimate, and then they will make the R&D, and then they will make the manufacturing. They will start the manufacturing, and then they will sell the product. So this is the process. Here, till the R&D stage, till the research and development stage, how much cost they are incurring as a percentage? That is what they are asking. The total cost incurred is 11 crore 65 lakh 60,000. Out of this, till research and development, 80 lakh only incurred. 80 lakhs is the research and development cost. Now, this is a percentage they are asking. So, we are multiplying by 100. We are getting 6.86%. Total percentage of cost incurred till the research and development stage. This is what they are asking. The third solution, they are asking what is the strategy to be adopted by the company to develop a new watch. This is a theory question. You can read it by yourself. We are focusing on the practical part in this video. Now, we can read the next third question. The company was established in 1980 and has an enormous wealth of experience in the manufacturing industry, mold manufacturing industry. It is selling a wide range of plastic molds. Over the past decade, the company has developed a reputation for quality products. Now, it deals in injection molds, blow molds, die sets, mold waste. These are the products of the company. With a state-of-the-art infrastructure facility, the company is able to meet the qualitative and quantitative demands of the clients. The vision and mission is to provide high-class manufactured products using the best quality raw material. These are all not important for us. The company has started to develop a new product which is about to be launched into the market. It is estimating to sell about 80,000 of these products at a sales price of 300 over the product's life cycle of 4 years. The life cycle is 4 years. Total units is 80,000 they are going to sell. The sales price is 300 rupees. The data is they are given the data of different costs. Cost of design and development 8,25,000, manufacturing cost per unit, selling cost, administration cost, warranty expenses. Here they have given it in different metrics. Like this 12,500 is per year. For calculating the total selling cost, we have to calculate 12,500 per year for 4 years product life cycle. This is the yearly cost. And then for per unit, 100 rupees per unit, we are going to sell 80,000 units. By doing these two, you will get the total selling cost. Same like that for administration cost, 50,000 per year. Multiplied by 4, you will get the total administration cost. Warranty expenses, 5 replacement parts per 25 units at rupees 10 per part. 1 visit per 500 units. Cost rupees 500 per visit. Here we have two types of cost. One is replacement cost. First thing is you have to go and replace the parts. Second thing is for that you have to go and visit the customer and then you have to create the, you have to find out the bad parts and then you have to replace it. If you produce 25 units, you will get 5 replacement parts. This is the ratio. Now how much units we are producing? For 25 units, we will get 5 replacement parts. 5 units we should replace. 5 units will be bad quality, we should replace it. For 80,000 units, how much you will get the replacement parts? We will get 16,000 replacement parts for 80,000 units. Now, 1 visit per 500 units. We can see the calculation in the answer itself directly. The same calculation they have done here. Total 80,000 units. For every 25 units, 5 parts you should replace. For replacement, the cost is 10 rupees per unit. 16,000 we found out. And then for that 10 rupees per unit, we get 1,60,000. Now, for this warranty, we are getting the visit cost also. This is the visit cost. For the visit cost, we are getting total 80,000 units we are producing. For 500 units, we have to do 1 visit. So, for 1 visit, how much is the cost? 500 rupees is the visit cost per visit. So, when you do this, you will get 80,000 rupees. This is the warranty cost. If you calculate all this and total, you will get the total cost of 1,93,15,000. In the first subdivision, they are asking the life cycle cost only. You have to calculate the individual cost for per activity and then total it, you will get the total cost. They are asking the next subdivision, whereas they are asking to suggest 2 ways to maximize the life cycle return. This is a theory question. You can read the answer by yourself. Next thing is, we can read the 4th question. The company has developed a new product which is about to be launched into the market. The company has spent 30 lakh on research and development. It has also bought a machine costing 11,25,000 to produce the product with a capacity of producing 1,100 units per week. For 1 week, it will produce 1,100 units. The machine has no residual value. There is no scrap value. The company has decided to charge the price that will change the cumulative numbers of units sold. Here what we are selling is that in a product life cycle, what we have is that we have introduction stage, growth stage, maturity and decline stage. We have 4 stages. In 4 stages, we cannot keep a uniform selling price. In the introduction stage, we have to keep a low selling price. In the growth stage, we can increase the selling price. In the maturity stage, the selling price will be at its peak. In the decline stage, the customers will not buy the products. They will be showing some hesitation. So we have to reduce the selling price. Only then we can achieve the sales. So here they have given that they are totally producing they are totally producing a n number of units. In that 0 to 2,200 for this much unit of sales, they have decided the selling price for 750. Over the lifetime of the product, they are reducing the price stage by stage. From 2,201 to 7,700, the price is reduced to 600. Same like this for the different interval, they are reducing the price stage by stage. Now, based on the selling price, it is expected that the sales demand will be shown as below. They are calculating it on the basis of week. For 1 week, the company will produce 1,100 units. Here what they are telling is that for weeks 1 to 10, the sales demand will be 220 units. This sales demand they are giving per week. For 1 week, it will be 220. For 10 weeks, 220, you will get 2,200. This will be the sales demand total for week 1 to 10. Same like this, every 10 weeks, they are giving the sales demand per week. We have to multiply by 10 in order to get to the total sales demand during the 10 weeks. Now, they are telling that till 110 week they are going to sell the product. After that they cannot sell the product. There will be nil sales after 1/10th week. Till 1/10th week they are going to sell the product. Now they are also telling the variable cost. Variable cost is also as per the interval only. First 2,200 units, the cost will be 375. Next 13,750 units. First they sold 2,200 and then next 13,750. So totally how much they sold? Totally till now they have sold 15,950 units. For first 2,200, the variable cost is 375. For the next 13,750 units, the cost is 300. Like this, they have given the cost for every interval. Okay. Now they have given the total contribution statement for introduction and growth stage. They have given that the introduction stage will be between week 1 to 10. The growth stage will be for week 11 to 30. The total units produced and sold is that for introduction stage 1 to 10 week, the sales demand per week is 220. Totally 10 weeks. 2,200 is the sales demand for first 10 weeks. 2,200 sales demand, and then for growth, we are getting 11 to 30. 11 to 20 is one interval, 21 to 30 is another interval. 5,500 units, 8,250 units. The selling price also they have given above. We can see the selling price. We have to decide based on the units. Here, for first 1 to 10 week, we are getting 2,200 units. So, we are taking 750 rupees. After that, 2,201 to 7,700, we are getting 600. 7,701 to 15,950, we are getting 525. In the growth stage, in the introduction stage, we sold how many units? 2,200. In the growth stage, how much we are selling? 550 into 10, 11 to 20 weeks plus 825 into 10. This will be the total how much we are selling during the growth stage. We are selling total 13,750 units during the growth stage. Already we sold 2,200 in the introduction stage. In the growth stage we are selling this much. So totally how much we sold? Totally we sold 15,950 units. Now for first 2,200 units the selling price is 750. For the next 2,201 to 7,700. How much units we are getting in this interval? We are getting 5,500 units. For first 2,200 units, the selling price is 750. For the next 5,500 units, the selling price is 600. And then here in this interval, we are getting 8,250 units. For this 8,250 units, the selling price is 525. Here in the growth stage, we are selling 5,500 units, and then we are selling 8,250 units. How we are getting this number? We are getting by multiplying the sales demand per week into total number of weeks. This much we are getting the sales demand. For this 5,500 units, the selling price is 600. 8,250 units, the selling price is 525. That's how they got the selling price here. 600 and then 525. Everything is from the table only. You have to calculate the number of units you are selling and then in which interval that units is falling. That also you have to calculate. By matching that, you can find out the selling price. And then variable cost also. Variable cost, first 2,200 units, which will be 375. Same like that, first 2,200 units, we are getting 375. After that, next 13,750 units. Now in the growth stage, total how much units we are selling? We are selling 13,750 units in the growth stage. So 13,750 units. For the next 13,750 units, what is the variable cost? 300 rupees. So we are getting 300 as the variable cost. Now, selling price less variable cost, you will get the contribution. Then total contribution is that this is the contribution per unit. Multiply the number of units, 2,200. You will get the 8,25,000 contribution. Same like that, you can calculate for growth stage also. This is how they have found out the values like 600, 525. How they are mapping with the tables. That is what I made you understood here. Now, the total contribution statement we have to find out for the remaining stages, the maturity stage and the decline stage. We have to also calculate the pricing strategy. This is a theory question. And then find possible reasons for the changes in cost. Why the cost is changing? The variable cost, we are reducing it on stage by stage basis. Why we are reducing? That is what they are asking. First, we can see the first solution. For the decline stage and maturity stage, we have to calculate the total contribution statement in the same format. Now we can notice one thing in this table. Here, till 30 weeks, we have no problem. The first 10 weeks is the introduction stage. And then these two is coming under the growth stage. Now, we have to divide the remaining sales into whether a decline stage or maturity stage. For that, what we can do is that the sales demand per week is in the peak, where it is in the peak amount, 1,100 is the highest sales demand per week. It is coming under 31 to 70 weeks. So this should be the maturity stage, where the sales demand will be at a peak stage. In the peak amount, the sales demand will be there. After that, the sales demand is declining. You can see the decline in the sales demand. So this is coming under the decline stage. This we found out. Now, the total units we are selling under the maturity stage is that 1,100 into the total number of weeks here is that total 70 minus 30. We have 40 weeks here. So totally we are selling for 44,000 units in the maturity stage. And in the decline stage, if you calculate this, you will get 22,000 units. We are selling 22,000 units in the decline stage. Now, for the 44,000 units and 22,000 units, we have to calculate the selling price and the variable cost. For that, what we have to do is that total cumulative sales we have to find out. Till maturity stage, how much sales we have done? In the introduction and maturity, in the introduction and growth stage, we sold a total of 15,950 units. Till 15,950 units, this is the selling price table. Now, what we have to do is that we are going to take the selling price for maturity stage and decline stage from these two only. Here, after selling in the introduction and growth stage, we are going to sell 44,000 units in the maturity stage. Total how much? We will be selling a total of 59,950 units in total introduction, growth and maturity stage. This is in the introduction and growth stage. This is in the maturity stage. Now, for first 15,950 units, we already found out the sales price variable cost. It is already given in the question. For this 44,000 units, we have to find out the selling price. This 44,000 units, it is coming in the interval of 15,950 we already sold. So, 15,951 to 59,950. This is the units we are going to sell in the growth stage. If you calculate the difference between these two, you will get exactly 44,000. So, this for this 44,000 units, same interval you can match it here. The selling price will be 450. So, by this what we found out in the maturity stage, the selling price will be 450. And then, in the decline stage, how much we are selling? 22,000 units. Now, we used all the sales price in the table. This is for introduction, this is for growth, this is for maturity. Now, the remaining is only one selling price that will be used for decline. After selling 59,950 units, for every 1 unit extra we sell, the selling price will be 300 rupees. The maturity stage is completed by selling 59,950 units. If you sell again, it will come under the decline stage. So now what we found out, this is the sales price for maturity stage, this is the sales price for decline stage. Here what we are saying is that we have sold 15,950 units till the introduction and growth stage. So these two variable costs we have already used. Now these three are remaining. This we have to differentiate between maturity stage and the decline stage. We are going to sell 44,000 units in the maturity stage. These two if you total, it will come to 44,000 units. 22,000 units, 22,000 units. If you calculate, you will get 44,000 units. These two will be the selling price for maturity stage. In maturity stage, we will be selling a total of 44,000 units. In that, 22,000 units will have a selling price of 225, and then another 22,000 units will have a selling price of 188. Now, after that, in the decline stage, we will sell another 22,000 units. For that, the variable cost will be 225. Sorry, I told selling price, I think so. This is the variable cost. In the selling price, we already found out from the above table. This is the variable cost we are talking about. For 44,000 units in the maturity stage, first 22,000 units will have a variable cost of 225, another 22,000 units will have a variable cost of 188. In the decline stage, all the units will have a variable cost of 225. Now, this data we found out. Now we can see the solution. Here, in the solution they have given. This is the maturity stage. We are going to sell it in two different parts. 22,000 units, 22,000 units. For that we already found out for maturity stage the selling price will be 450 from the first table. And then decline stage the selling price will be 300. Variable cost we found out from the variable cost table. 225 for first 22,000 units, 188 for the second 22,000 units. And then this 225 is for all the units we sell in the decline stage. Now, when you reduce the variable cost from the selling price, you get the contribution. When you multiply it with the total number of units, you get the total contribution. This is what they are asking in the first subdivision. The pricing strategy and the possible reasons for changes in cost, it is because of some reasons which is given in the theory part. This is a theory answer. You can read it by yourself. Now we can read the next question. This question is about the theory of constraints concept. The company manufactures surveillance camera equipment that is sold to various office establishments. It also installs equipment at the client's place to ensure that it works properly. Each camera is sold for 2,500. They are selling CCTV cameras. The selling price for each camera is 2,500. Material cost is 1,000 for each camera. It is the only variable cost. All other costs are fixed. The information for manufacturing and installation is the annual capacity for manufacturing is the company can manufacture 750 camera units, but they can install only 500. Why they can install only 500? Because there might be a shortage of labor. Labor can only install 500 units annually. Actual yearly production installation. This is the budget they are giving. And then this is the actual they are giving in the second line. 500 actually they are doing. Installation also 500 they are doing. If they produce more than 500, they will not be able to install it. Because after installing 500 itself, the labor will be over. We will not getting any other labor for the year. So they have to produce only 500 and install that 500. In the next year, they can again produce 500 and install 500. This is what they are following now. What they are asking is that identify the bottleneck in the operation cycle and which should be improved by the company. Give reasoning for your answer. What is the bottleneck here? What is limiting the amount of production? Installation is the factor which is limiting the amount of production. If the installation is 750, we will be able to produce more 250 cameras and we will be installing that also. So installation is the one placing the restriction on the amount of units which we can manufacture. So that is the bottleneck resource. Installation is the bottleneck. Now, an improvement in the installation technique could increase the number of installation to 550 camera units. This could involve the additional expenditure of 40,000. Whether they could implement this or not, they are asking. They can bring a technique. Because of that, the new installation will be 550. For the technique implementation, the total cost is 40,000 rupees. Whether it is beneficial or not, that is what they are asking. We can see the solution. For the second thing, they are calculating the contribution per unit. The selling price per camera is 2,500 is the selling price. The material cost, variable cost is 1,000 rupees per camera unit. Variable cost. You will get the contribution of 1,500 rupees, which is the contribution per unit. Now, by implementing this technique, what we can get is that we will be able to install 50 extra cameras. For 50 extra cameras, we will get a total contribution of 50 into 1,500. 75,000 we will get. And then, for achieving this extra contribution, we are incurring an expenditure of 40,000 rupees. As a net benefit, we are getting 35,000 rupees extra by doing this implementation technique. Since the net benefit is positive, the company should implement this. That is what they are saying. The company should implement this technique and this will increase the bottleneck. Now, we can see the third subdivision question. In the third subdivision, they are asking that the engineers have identified ways to improve manufacturing that would increase the production by 150. This would involve a cost of 100 per camera unit due to the changes in direct material. Whether the company should implement this or not, they are asking. Here, already we are capable of producing. We have the ability to produce 150, but we are limiting it to 500 because of the installation capacity bottleneck. So, we are already limiting the production. If we produce extra 150 camera, we will not be able to install it. So, we will not get any contribution for this total 150 units. We will not be able to install it, therefore no contribution. So, we have no gain from this. but the extra cost is 100 per camera unit. So we will be getting a net loss. Total we will be we will be producing 150 extra cameras. The cost is 100 per camera unit, it will come extra. But we have no benefit from this technique. Only cost is being incurred. So we should not consider this option. That is what given in the solution also. That's all about this question. Now we can read the next question. Sixth question. The company produces two types of products. Both the products are produced in the same material, machinery and skill labor. Machine hours available are 4,000 hours. Here they are telling that 4,000 hours only we have. So that is the limiting factor here. Now information relating to the product. They are telling the selling price, material cost, machine hour, annual demand, online booking, everything they are telling. This and all, this first of all is a normal information. Online booking is that they are telling that they are selling products in both offline and online. In the online, the customers will book the products. The company has already accepted the booking for 400 units of unit Z and 1,200 units of product B. Due to poor productivity level, late order and declining profit, the company has suggested to introduce throughput accounting in the company. Total factory cost is 1,42,60,000. Now they are coming to introduce the throughput accounting. We can see the question what they are asking. Using throughput accounting, calculate the optimum production mix and the maximum profit. Now they can produce both the products. They are having only 4,000 hours. What is the optimum production mix? What is the mix? What is the ratio of sales of these two products so that we will get a maximum profit? Now in this question for solving, what we have to do is that we have to calculate the contribution per unit, which product is giving more contribution. If the product gives more contribution, we will produce that first. We will produce the product giving low contribution in the secondary only. As the second product only, we will produce the product with low contribution. First, we have to give priority to the product which will give us higher contribution. So we have to calculate the contribution in the question. Here, this is the solution. We have taken the selling price given from the question and the material cost also it is given in the question. Now, this is the thing we are getting as a contribution. Contribution is also called throughput in the throughput accounting concept. Now, we are getting the contribution per unit of product Z and product D. Now, we are using bottleneck resource as machine hours. We have only 4,000 machine hours. We have to use it properly. For one machine hour, if you use in unit Z, how much contribution you will get? If you use one machine hour in unit D, how much contribution you will get? That is what we are going to find out. The contribution from one unit of product Z is 9,000. For producing that one unit of product Z, we require 1.6 machine hour. If we spend one machine hour in this product Z, how much contribution we will get? That is the thing we are calculating this. Here, we are calculating by 9,000 divided by 1.6. We are getting 5,625. If you spend one machine hour in unit Z, you will get 5,625 contribution. Same like that in product D, the contribution is 2,800. For attaining this contribution, we are spending 0.8 machine hour. For one machine hour, the contribution is 3,500. So, if you spend one machine hour, you are getting 5,625 rupees in unit Z and 3,500 rupees in product D. Now, here we will be producing the product which gives high contribution first. So, we will produce product Z first and then the remaining machine hour we will use for producing product D. Now, the optimum mix is that we have to first to produce product Z and then we have to produce product D. For product Z, what is the maximum annual demand? For product Z, we can sell a total of 2,000 units. For 2,000 units, how much will be the labor hour used? For one unit, it will be 1.6. For 2,000 units, we have to multiply by 1.6. Now, the total machine hours for unit Z used is 3,200 hours. Total, we have 4,000 hours. We already used 3,200 for product Z. Now, how much remaining hours we have? 800 hours. In this 800 hours, how much units of product D we can produce? For one unit, the hours required is 0.8. We have 800 hours. How much is the products we can produce? That we can calculate by dividing. You can produce 1,000 units in the remaining 800 hours of machine hours. Now, the ratios, we produce 2,000 units of Z and then 1,000 units of D. So, the ratio is 2:1. Production mix 2:1. This is the optimum mix. In this optimum mix, how much profit we will be earning? For 2,000 units, this is the contribution. For one unit, the contribution is 9,000 in Z. For one unit, the contribution is 2,800 in D. Multiplied by the number of units, you will get the profit in optimum mix. You can total this and get the profit. Now, the current profit is we have to calculate. What is the current profit? Currently, the company has already accepted the online booking for 400 units and 12,000 units. In the optimum mix, what we have to do? We have to sell the 2,000 units of product Z and D we have to sell 1,000 units. 2:1 is the ratio. Here they have already accepted 400 units and 1,200 units. The capability is we can produce only 4,000 hours worth of units. We already accepted 400 and 1,200. Now we are selling at a below optimum level. We have to calculate the current profit here. Here for current profit, we have to see the total labor hours. Total we have 4,000 labor hours. We already accepted the online booking for 400 and 1,200. We cannot reject that online booking. So we have to produce it first for online booking and then we can produce as per the optimum mix. Now, for Z, we used 400, we produced 400 Z and delivered for online booking. For that, the total labor hours is 640 we used for online booking Z. And then for online booking of D, we used 1200 in 0.8 hours. We produced 1200 units of D in online booking and then used a total of 960 labor hours for delivering that product. Now, remaining labor hour, how much we have? 2400 after doing the online booking. Now, this remaining labor hour, when used for Z, we can produce a total of 1500 units of Z. We already sold 400 units of Z. The total demand for Z is 2000 units. You already sold 400. So the remaining demand is 1600. If you produce 1500 also, you can sell it in the market because the total demand which is remaining is 1600. So we will be using all the remaining labor hour for Z itself. So we will be producing 400 for online booking Z, 400 online booking Z, 1200 will be producing product D online booking, and then remaining labor hour we will be using and producing Z for offline. When you multiply with the contribution per unit, this is the total contribution which we are getting. Now, this will be obviously lower than the optimum mix contribution because we are not following the optimum mix. When you follow the optimum mix, you will get the maximum profit. If you change anything, you will get a low profit only. You will get a profit below the maximum level. Now, total current profit is when you total all these three, you will get 2 crore 4 lakh 60,000. Profit lost due to online booking. The maximum profit which you can earn is 2 crore 8 lakh. But due to this online booking, you lost some profit. You earned only 2 crore 4 lakh. This revenue lost due to online booking is 3 lakh 40,000. This is what they are asking in the question. Here, what we are asking is that in the first subdivision, they are asking the optimum production mix, which we found out 2:1. Now, amount of profit lost they asked, that also we found out. Now, for avoiding loss of profit, what they have to do? They have to produce the optimum mix, and then they are asking the various ways through which price customization can be done. This is also a theory question. Now, the products are in the maturity stage and introduction stage. What is the most appropriate pricing policy? That is also a theory question. You can read it by yourself. Now, environmental management accounting. This is a question which is mostly fully theory. You can read it by yourself. There is no practical part in this question. Just using the concept, you have to draft a solution for the questions asked. You will be able to easily understand yourself once you read the concept and then come to this. Now, we can read the 8th question. The company is a leading manufacturer and exporter of leather products, product Q and product R. The company has two products. The selling price is 620 and 420. Both the products pass through three processes. Leather product, they pass through three processes: tanning, dyeing, and then finishing. The allocation of cost of manufacturing is given below. Direct material cost for 1 unit, when it goes through tanning, the cost will be 140, dyeing 180, finishing 140. The total of 460 will be incurred for one product. If it goes through all three products, for materials alone, this much will be the cost. For tanning, dyeing, finishing, we have individually labor cost also. For this is the cost per unit, which is common for product Q and product R. Now this we have to allocate for product Q and R in the proportion given here. Here what you have to understand is that this 140 and 90 is common for both the products. That is like that they have given a weighted average like amount here. This 140 plus 180 plus 140. This will be the total of direct material cost. Here, this direct material cost itself, 140 is common for both the products. Out of this, 70% will be going to product Q, 30% will be going to product R. We can see it in the solution in detail. The general overheads per unit of leather product Q or R. For commonly, for 1 unit, the general overhead is 115 rupees. This absorption rate they are getting by dividing the total general overhead cost divided by the total number of products. Total cost divided by number of products. This they are doing and getting a rate of 115. Now, in this industry, all the major production processes have environmental impact, including generation of waste, harmful gas, noise pollution, etc. The management is worried about the environmental impact and has taken initiative to preserve the environment. They are trying to reduce the impact of pollution by planting trees, treatment of harmful gas, airborne emission. They are doing to reduce the impact on the environment. The management of the company decides to adopt environmental management accounting as a part of the decision making. The pricing will also be a factor in the environmental cost. General overheads blanket rate is 115 per unit, which includes in this 115 what all the cost is there. For harmful gas treatment, 40 rupees they are spending. Wastewater treatment, 50 rupees. Cost of planting trees, 10 rupees. Miscellaneous, 15 rupees. When you total this, you will get 115. This 115 is divided into 4 activities like this. This 4 treatment also, they are apportioning it to different process. Because of tanning, this much wastewater generated. Because of dyeing, this much wastewater generated. Like that, total wastewater generated is 1,500 liters per week. Emission of harmful gases. This much cubic meter or cubic, whatever the unit is, they are producing this much harmful gases in the processes. So, this harmful gases on the wastewater generated also, it will be allocated to product Q and R in the ratio. The remaining overhead cost can be allocated equally between product Q and R. Here they have given 4 activities. but they have given the allocation for only 2 activities here. The remaining 2 activities, planting trees and miscellaneous, it will be in the ratio of 50:50. It will be apportioned equally between product Q and product R. That is what they are giving. Here they are asking product-wise profitability based on original cost allocation. We can see the solution for this question. Based on the original cost allocation means generally what they do, they will calculate a blanket rate of 115 and they will use it. And they have a different approach also. They can divide it into 115 into activities and then apportion it based on the process ratio which is given here, 70-30, 50-50. They can apportion it based on this also. So these are two different approaches. Based on original cost allocation means they are asking as per the blanket rate of 115. By using this, how much profitability we are getting. For product wise they are asking. And then for activity based, by allocating the 115 rupees of general overhead into this also, we are getting one profit. That profit is how much? That is also they are asking. And then in third subdivision, what is the difference in profitability between these two? That is also they are asking. Now we can see the solution. In the question, what they are saying, this total cost of 140 for tanning, this particular cost, it will be 70% allocated to product Q and then 30% will be allocated to product R. This calculation I have performed in detail. I will show you the workings here. Now, this is the workings. Material cost 140, 180 and 140. This 140 will be divided between Q and R in the ratio of 70-30. So 140 of 70% will be 98, 140 70% will be 42. So this is apportioned in the ratio of 70 and 30. Same like that for dyeing, it should be divided into 50-50 ratio. So 90-90 I have divided. In finishing also 140 cost, it will be divided into 70-30, 98 and 42. So in tanning, dyeing and finishing, the total cost for product Q is 98 plus 90 plus 98. This is the total cost, material cost for product Q in all the three processes. If you add all these three, you will get the total material cost in all the three processes for product R. Same like that in direct labor also, we have given the total cost. It is directly given in the question. You are apportioning it in the same ratio, 70-30, 50-50, 70-30. When you add all these three, 63, 60, 63, you will get the total direct labor cost incurred in all the three processes for product Q. Similarly, if you add all the these three, you will get the direct labor cost for R. That is what I have given here. Total direct material for Q, total direct labor for Q, total direct material for R, total direct labor for R. This is the total material cost and labor cost per product for Q and R separately. Now, the selling price they have given 620 and 420. We already saw in the question. If you read the question, in the first para itself, they will be giving the selling price only. Material cost for Q, we have to take from the above. Here above, we calculated material cost for Q, 286. Then labor cost for Q, 186. Labor Q, 186. And then R also material labor, 174, 114. You reduce all this variable cost, you will get the contribution. Same format, sales minus variable cost, you will get the contribution. After that, you have to use the blanket overhead rate because we are doing it as per the original cost allocation. You are reducing the blanket overhead rate. You are thinking it as a fixed cost and then using it as a blanket absorption rate. You are getting the profit per unit of 33 and 17. Now, this is the profitability as per the original cost allocation. Now we have to find out the profitability as per the activity based costing allocation. This general overhead is having a 115 rupees per unit. This is for one unit for either Q or R. For one unit, this is for 115. Now we have to apportion it between Q and R. Now, for allocating the general overhead cost blanket rate, you have to understand how the blanket rate is derived. The formula is total overhead cost incurred divided by the number of units of Q plus number of units of R. These two products, total units is in the denominator, total cost is in the numerator. They are dividing it and they are getting a blanket rate of 115. Now, in this question, they have taken an assumption that only 2 units are manufactured. And then this means that it is a 1:1 ratio. For every 1 unit of product Q, you produce 1 unit of product R. For example, if you produce 100 units, 50 units will be product Q, 50 units will be product R. This is the assumption they are taking here. In this question, they have not given how many units they are manufacturing or what is the sales mix or production mix. Anything they have not given. They are only telling that there are 2 products, Q and R. So, they are taking an assumption that equal number of products are manufactured. So, we can take that, for example, only 2 units are manufactured. 1 unit of Q and 1 unit of R. Now, according to this formula, the rate is 115. The total number of units 2 is in the denominator. Total cost is in the numerator. Now, by cross multiplying, you can find out the total cost. 115 multiplied by 2, the total cost will be 230 for 2 units manufacturing. In this 230, we have to apportion it between different activities. Harmful gases, wastewater, planting trees, miscellaneous. They have given the table in the question itself. Here, like this, they have given the allocation. For 115 rupees, what is the breakup? 40 is the treatment of harmful gas, 50 is the wastewater treatment, planting trees 10, miscellaneous 15. In the same ratio, 40 is to 50 is to 10 is to 15, you are allocating the 230 rupees. By allocating this, what you get? When you allocate the 230 like this, you will get these amounts. This is the total cost of harmful gas, wastewater, etc. for producing 2 units. Now in question, they have given a table. Here they have given the total wastewater generated. The wastewater cost will be allocated on the basis of wastewater generated. Total is 1500 liters. For the process, they have given the breakup. Out of 1500, 900 is in tanning process, 600 is in dyeing process. Like that, they have given the breakup. And then harmful gases also, total 800 they are releasing into the air. Out of that, 400 belongs to the tanning process, 300 for dyeing process, 100 for the finishing process. Out of this wastewater generated, 70% is for product Q, 30% is for product R. Same like that ratio they have given. Now we have to allocate the cost we found out based on this ratio. We can see the solution. Here, as per our assumption, we can take the wastewater cost to be 100 rupees. Now, this 100 rupees wastewater cost, we have to allocate between the process first. 100 rupees will be allocated on the basis of 900 is to 600 is to 0. By allocating in this ratio, we get 60 rupees of wastewater cost is for tanning, 40 rupees is for dyeing. And in tanning itself, 70% of this cost will go to Q, 70-30. Same ratio as we discussed earlier, 50-50. The total cost of 60 in tanning process wastewater will be allocated in 70-30. Dyeing process wastewater will be allocated in 50-50. Same like that, we have total harmful gases cost 80 rupees. That will be first allocated in the base of 400, 300 and 100. It will be allocated to the process first. And from that process, they can allocate it for the product 70-30, 50-50, 70-30. Okay, now this is the working. Now for allocating the total cost of harmful gas 80 rupees, we are first allocating it to the process in the ratio of 4:3:1. Now we are getting the cost of per process 40-30-10 is for every process we are getting. That 40 we can distribute it between product Q and product R in the basis of ratio given there 70-30. And then for next process we can allocate in the ratio of 50-50. The next process again 70-30. This is the allocation ratio given in the question itself. That harmful gas total cost we can allocate in the ratio. Now we have to find the total cost of wastewater for product Q. So we have to add these two. And then for finding the total wastewater cost for product R, we have to add these two. And then for total harmful gases cost for product Q, we have to add this. And for R, we have to add all this. That is what I have given here. Total wastewater cost for Q, for R, and harmful gases cost for Q and for R. Now, this is based on the ABC cost allocation. The remaining of the units and the cost which we calculated in the original cost allocation, this itself will be copied. Selling price will be the same, direct material, direct labor. Till contribution, everything will be the same. Selling price, direct material, direct labor. It is the same as the previous original cost allocation workings. Now, for wastewater, the total is 62. 62 for Q, 38 for R. 62-38. And for harmful gases, 50-30. 50-30. And then planting trees cost. In the total cost overheads, we got 20 rupees for planting trees, 30 rupees for miscellaneous. This will be allocated equally between the products. 20 is allocated as 10, 10, 30 is allocated as 15 and 15. Now when you reduce all these costs from the selling price, you will get the profit per unit. This is the profit as per the activity-based costing allocation. Now, in the third subdivision, they are asking that what is the difference between the probability. That you can difference between the profitability, that you can easily tell. Earlier you got the 33 and 17 as the profit. In this, which is the most profitable product? Q is the product giving the high profit. In this, when you compare these two, the product which is giving high profit is product R. In product Q only 11 rupees we are getting, but in product R we are getting 39 rupees. So the picture got changed. In original cost allocation we got a different result, but in activity based costing we got product R which is the highest profitability. So that is the change we are getting. That is what we have to explain in the third subdivision. That's all about this question.